Let's dive into 7 stocks and 1 crypto token that have been making waves. VERB, PBM, BTAI, COMM, BTBD, SCS, and MANTLE. We'll break down what each company does, their recent performance, and whether there's real opportunity or just hype. Quick disclaimer, I'm not a financial advisor. This is for educational purposes only. Use this as a starting point for your own research and due diligence. For each, we'll look at the business model, recent stock action, and any major news or catalysts. By the end, you'll have a clearer picture of whether any of these fit your investment strategy. Let's get started. First up, VERB Technology, ticker VERB, is a SaaS company focused on interactive video sales tools. They're aiming to transform how brands and influencers connect with audiences online, using technology to make shopping more engaging and interactive. Their main product, Market.live, lets brands and influencers host live shopping events, merging e-commerce with entertainment. This platform is designed to create a seamless experience where viewers can interact, ask questions, and buy products in real time, all while being entertained. The live stream shopping market is booming, especially in Asia, where it's already a multi-billion-dollar industry. VERB is betting big on its growth in the US, hoping to capture a share as American consumers warm up to this trend. The stock is extremely volatile, with big price swings on news and partnerships. Investors should be prepared for rapid changes in sentiment and price. VERB has a history of diluting shareholders to raise cash, a common risk for unprofitable growth companies. This means your ownership stake can shrink as new shares are issued. Financially, they're not profitable and burn a lot on R&D and marketing. The company is investing heavily to build out its platform and attract users, but that comes at a cost. The key question, can they scale revenue before running out of cash or diluting further? Their future depends on reaching profitability before their resources dry up. Competition is fierce. Giants like Amazon, YouTube, and TikTok are in the same space, each with massive user bases and resources. VERB's angle is a more specialized white-label solution, targeting brands that want a customizable platform. But it's a tough fight against much larger players. If management executes, the upside is big. If not, the downside is real. Success could mean rapid growth, but failure could mean steep losses. This is a high-risk, high-reward stock that needs close monitoring. It's not for the faint of heart or those seeking stability. Watch their customer acquisition costs, recurring revenue, and quarterly reports. These metrics will tell you if the business model is working. Also, keep an eye on new partnerships and user growth, as these can drive momentum and signal market acceptance. Ultimately, VERB is a speculative play on the future of online retail. If live stream shopping takes off in the US, VERB could benefit significantly. Only consider it if you're comfortable with volatility and risk. This stock is best suited for those with a high risk tolerance and a keen eye on the market. Not a stock to set and forget. Active monitoring and a clear exit strategy are essential if you decide to invest. Next, Psyence Biomedical, ticker PBM, is in the psychedelic medicine space, developing psilocybin therapies for palliative care. They're pre-revenue, with value tied to clinical trial success and regulatory changes. The main risk, if their trials fail, the stock could collapse overnight. But if they succeed, they could be first to market in a huge mental health sector. Watch for trial updates, regulatory news, and cash burn. These drive the stock. Like most early-stage biotechs, they'll likely need to raise more money, diluting shareholders. This is a pure speculative bet, potentially massive upside, but a real risk of total loss. Only invest if you have a high risk tolerance and a long time horizon. Keep your positions small and diversified. Follow their press releases and financials closely. The sector is volatile and news-driven. PBM is a lottery ticket backed by Psyence, but not for the faint of heart. Don't expect predictable cash flows. Treat it as a small speculative part of your portfolio. Bioxcel Therapeutics, ticker BTAI, is a commercial-stage biotech company harnessing the power of artificial intelligence to develop innovative drugs for neuroscience and cancer. By leveraging advanced AI, Bioxcel aims to accelerate drug discovery and bring new therapies to market faster than traditional methods. Their flagship product, IGALMI, is designed to treat agitation in patients with schizophrenia and bipolar disorder. IGALMI is already FDA approved, making it a significant milestone for the company and a potential game changer for patients and healthcare providers. The big question for investors and analysts is, how well is IGALMI actually selling in the real world? So far, early sales have been underwhelming, which has led to significant volatility in BTAI's stock price as the market reacts to each new update. Drug launches are notoriously expensive and slow. Building a dedicated sales force, educating doctors, and securing insurance coverage all take time and resources, often more than investors expect. Beyond IGALMI, BTAI has a promising pipeline including clinical trials for agitation related to Alzheimer's disease. This represents a huge potential market but also comes with high scientific and regulatory risk. Financially, the company is still burning cash on research, development, and commercialization efforts. This means dilution, issuing more shares to raise money, is a real concern for shareholders. Investors need to closely track both current sales performance and the progress of BTAI's drug pipeline to get the full picture. The stock price reflects a mix of tangible sales results and the speculative value of future drugs that may or may not succeed. Watch quarterly earnings reports for signs of revenue growth and for updates on new drug indications or regulatory milestones. Any clinical setbacks or negative trial results can hit the stock hard and quickly erode investor confidence. BTAI is a complex blend of commercial execution and biotech speculation, requiring investors to balance both business fundamentals and scientific progress. Success with IGALMI or new drug approvals could drive significant gains for the stock and reward patient investors, but setbacks, slow sales, or additional dilution could mean more downside risk and disappointment. To make informed decisions, analyze both the sales data and the underlying science behind BTAI's drug candidates. This is not a simple story. Do your homework, dig into the details, and understand the risks before investing. Bioxcel Therapeutics is high risk, but with real potential for high reward if they can execute on their ambitious plans and deliver results. Commscope, ticker COMM, makes the hardware behind global communications fiber cables, antennas, and more. They're a picks and shovels play on 5G, fiber internet, and data centers. Despite strong industry trends, the stock's been in a downtrend due to heavy debt and margin pressure. Their big acquisition of Eris saddled them with billions in debt, limiting flexibility. Rising interest rates and supply chain issues have squeezed profits. Customer spending is cyclical. When telecoms cut back, Commscope feels it. Bulls see a turnaround cheap stock, eventual rebound in demand, and debt paydown. Bears see a value trap, too much debt, shrinking margins, and tough competition. Watch for improvements in cash flow, debt reduction, and margin recovery. This is a classic turnaround bet. High risk, potentially high reward. If management can right the ship, there's upside. If not, the stock could keep sliding. Not for the risk averse. Monitor earnings and debt closely. BT Brands, ticker BTBD, is a micro-cap restaurant holding company, best known for its Burger Time drive-thrus in the Midwest. They also own stakes in other small food businesses, aiming to grow through acquisitions. Micro-caps like this are highly illiquid and volatile. A few trades can move the price dramatically. The strategy: buy undervalued or distressed restaurant brands, improve them, and build a portfolio. Success depends almost entirely on management's skill at finding and integrating deals. Financials are small scale. Analyze per-store sales and margins, not big revenue numbers. Growth is key. Are they expanding Burger Time or making smart new acquisitions? A single bad deal could be a major setback. This is a high-risk, management-driven story. Only consider if you trust the team and can handle volatility. Not a blue chip. Expect big swings and limited liquidity. Watch for news on acquisitions and same-store sales. Deep research into management is essential. Keep positions small and diversified. BTBD is a speculative micro-cap play, not for most investors. Steelcase, ticker SCS, is a leading office furniture maker with a century-long history. Their business is tied to corporate spending and the health of the office market. The rise of remote and hybrid work is a huge challenge. Will companies keep buying office furniture? The stock is pressured as the market debates the future of the office. Bears say the office is shrinking for good. Bulls say it's evolving, not dying. Steelcase is pivoting to serve hybrid workspaces, collaborative areas, tech-enabled meeting rooms, and more. Success depends on convincing companies to reinvest in modern offices. Watch for order trends, especially in the Americas, and margin improvement as supply chains normalize. This is a value play with a lot of uncertainty. If offices rebound, Steelcase could recover. If not, it could keep struggling. The future is unclear. Do your own research. Track earnings and industry trends closely. a classic cyclical stock facing a major industry shift. Now for something different, let's dive into the MANTLE token, which is native to the MANTLE network. MANTLE is a Layer 2 scaling solution designed specifically for Ethereum, aiming to make the blockchain more efficient and accessible for everyone. Layer 2s like MANTLE help Ethereum handle more transactions by processing them off-chain, then posting summaries back to the main Ethereum network. This approach dramatically reduces congestion and makes transactions both faster and cheaper for users. What sets MANTLE apart is its modular design, which allows for flexible upgrades, and its massive treasury, inherited from BTAI. This treasury gives MANTLE a financial edge to fund development, attract talent, and support ecosystem growth. The MANTLE token serves two main purposes. It's used for governance, meaning holders can vote on proposals that shape the network's future, and it's also used as gas, paying for transaction fees within the MANTLE ecosystem. The investment case is compelling. If MANTLE can attract top developers, innovative projects, and a growing user base, demand for the token could surge, potentially driving up its value over time. But competition is fierce. Arbitrum, Optimism, and Polygon are all fighting for dominance in the Layer 2 space, each with their own strengths and communities. Technology risk is real. Bugs, smart contract vulnerabilities, or hacks could devastate trust in the network and cause the token price to plummet overnight. Crypto markets are notoriously volatile. MANTLE's price will swing with broader market trends, and sudden moves are always possible. Tokenomics matter a lot. Keep an eye on supply, inflation rates, and how tokens are distributed among investors, the team, and the community. Key metrics to watch include total value locked, TVL, daily active users, and transaction volume. These signal real adoption and network health. Investing in MANTLE is a venture-style bet on the future of blockchain infrastructure. It's about backing a platform that could power the next wave of decentralized applications. The potential rewards are high, but so are the risks and uncertainties. This is not a safe or guaranteed investment. Only invest what you can truly afford to lose, and never risk your essential savings on speculative assets like this. Stay informed, follow MANTLE's ecosystem growth, treasury decisions, and community updates closely to make smarter decisions. Ultimately, MANTLE is best suited for risk-tolerant, tech-focused investors who believe in the future of Ethereum scaling and want to be part of the next generation of blockchain innovation. That's a rapid-fire look at 7 stocks and 1 crypto, each with unique risks and rewards. There's no universal buy. It all depends on your goals, risk tolerance, and time horizon. Use this as a launchpad for your own research. Read filings, listen to earnings calls, and compare competitors. Never invest in something you don't fully understand. The best investment is in your own knowledge. Drop your thoughts or questions in the comments. I read them all. Thanks for watching. Don't forget to like and subscribe for more deep dives.